Welcome back to the FX Titan Lab, your go-to hub for smart market preparation. In today's pre-market breakdown, we'll dive into current market conditions, reveal the key levels we've pre-marked up, and discuss how the new weekly open could make or break them. Stick around because this insight could shape your entire trading week. All right, let's get into it. It's currently Monday, 5th May 2025, and it's now 9 minutes past 12 a.m. and we have clocked into the new week. However, looking at the gold chart, we can see that nothing is moving because gold opens just an hour after the Forex market opens up. But that doesn't stop us. We can still do some pre-market analysis just so that we can get our hands and feet a little bit wet or dirty. I think dirty. So we can get a better insight in how this pair is going to move. So cool. Let's start off with the monthly, right? Because we want to see what the monthly is doing or what the month looks like. So starting off the new month, we know that the new month of May opened bearish with a little to no wick at the top, and we can see that there is a long rejection wick below here, meaning there's going to be some rejections that we could see on the lower time frames going lower and lower. So we're going to see that as well, and we see that we can see that the trading environment is still going to be bearish just by looking at this candle. So let's go to the weekly time frame. Okay, so on the weekly time frame, what do we see? We see that this was the weekly candle that ushered us into the new month of May, the one that we're currently in. Okay, and we can see that previously, the week before, cleared the liquidity that was resting above this weekly bullish candle here at the top. So it cleared the liquidity that was resting at the top. We saw that price closed a little bit bearish, and the next candle that ushered us into the new month of May, we see that it collected the liquidity that was resting below here. That was resting below the low of the previous weekly candle. So now let's go down to the daily time frame. So right now we're assessing the true trend or the current trend of the market. Okay, as you can see on the daily time frame, you can see that the daily time frame shifted from the bullish side to the bearish side, and this is evidenced by price violently closing below this low here with a wick to body break. And actually, if at all you to go to our previous videos, you can see that price played out just like how we had predicted. Okay, so currently we can see that right now the market is still bearish, and people will be like, some traders are like, well, right now we can see that gold has tapped into this bullish area of liquidity. So wouldn't it be a good opportunity to now buy? And the answer is actually yes and no, and we'll see why. So now let's just taking that now our time frame of consideration, our constant time frame is going to be the daily time frame. We can scale down to the 1 hour time frame and see what exactly is going on at this key level. Because remember, also in the previous videos, I had still marked up this level here as a potential level where we could see some buy opportunities take place. And what happened? Well, can see that buys did actually happen at this level. So let's see what happened. Okay, so price from this level here, where we had a week-to-week break on the daily time frame. So from this level here, this is the level that led to that week-to-week break to the downside, and what it did leave for us, it left for us a bearish area of liquidity. So down below here, there was a bullish area of liquidity. But the reason why I still feel like yes, we could still see some buys take place, and we could see that price could potentially come to two areas actually right now, because as the week closed, we created another bearish area of liquidity just right there. So there is a supply zone, and right above that zone we have this area right here. And this area is a level that led to the ultimate bearish signal. Okay, so we have two areas of liquidity. Why do I have this area as one area to consider some sales to take place? Well, one, after price came into this bullish area of liquidity and created for us our pattern that we like to see, or you can call it an inverse head and shoulders pattern. You can see that price then shifted to the upside, but then here at this top here, this area here, we created a swing high, right, and we shifted again to the downside, and then we closed below this bullish area of liquidity, right? We closed below it, and we can see that then price then started to go to the upside. So we closed off bullish in this area, but it's a little bit complex. But if I told you to just follow the flow of how the price is interacting with the levels, with the buys, with the demand and supply levels, you can still be able to decode what is happening on the chart. So let's take it step by step, and let's see what's going on. Just now looking at this level right here, right? If at all we are considering ourselves to be in a bearish market, right? We could say that this move is a strong move, but then again, this move here is happening just out of the blue. It's happening, okay, it's happening just here at the top of this support zone. Are you saying that? So okay, it's not actually just a random move, just that I wouldn't still consider right away this level as one area for sales. Why? Price hasn't. First of all, the market hasn't opened, and this area here was informed maybe in a deep premium zone. If at all you know about the PDRAs, premium and discount. I don't place them on my chart, because now at this point I just eyeball them, and I just look at a chart and see the price levels, and I can just know that this area is coming from a premium zone, or it's not, in the event that we are selling now. And now here, this level here was formed just ever so slightly in the 50, just right above the 50, as you can see. I told you, Fibonacci trader, I don't like doing putting this on, because it's a little bit too colorful, so it hurts my eyes. But as you can see, it was kind of like in the golden zone. So okay, yeah, could be an area to consider, but let's see what happens when the market opens. But anyway, this is one area to still consider. In the event that it's respected, then we'll see price step into this level. And in the event that that level gets respected, then guess what? This level here, first of all, would be the first target. The next target would obviously be that level. And in the event that we are to break down below this demand zone, that means we are pushing prices even lower. There is another scenario. In the event that now this level gets violated, we would now be looking for bearish signals at this level here. In the event that this level still gets respected, then the narrative is still the same. We'll still expect to see price break below this bullish area of liquidity, and will push prices lower. In the event that all of these levels get violated, all of these bearish areas of liquidity get violated, like this one gets violated and also this one gets violated, then guess what? We'll be pushing prices even higher. But then this, to me right now, as how the market is looking like, is it's on the probability scale, it's a little bit down the 0.5 mark. The event we're in the probability scale of 0 to 1. It's just right below there in the negatives, you could say. So for now, I'm looking forward to see some selling action happen. So in the event that this bullish area of liquidity gets violated, we will be looking for some buy opportunities just here in the 3,100. So we're currently in 3,200, the price level that we're in. But in the event that this level doesn't hold, then obviously we will be now looking for some buy opportunities here, the 3,100 area. And actually it coincides very well with the bullish area of liquidity on the weekly, and also again the weekly overlap zone on the monthly time frame. If at all you want to take it a little bit a step further to determine whether or not gold is still a good pair to trade, like going bullish, well, you can use a trend line, and then we can clearly see that what's happening right now is a healthy retracement move on gold. Like what's happening is really healthy. And as I said, this is the zone that I'm really waiting for to see some buy opportunities take place. Well, one, because, well, anyway, as you can see, this support level coincides with the trend line. I don't really use trend lines. There are other factors that I consider, but this is a cool thing that I thought I would throw in, because it just kind of aligned with the level that I wanted to take some trades off of. So right now I'm still tilted towards the bearish side on gold, but we will see how it goes. And I think the market is going to open like in about 30 something minutes on gold. However, the other markets, the Forex markets, have already opened, so we'll see how that is going like. I think now it's time to switch to the other pairs. So gold, that's it for now. I'm going to keep you guys updated going into the actual trading week. I'm going to keep you guys posted. Of So the other pairs that we're going to look at are, first of all, USD/JPY and CAD/JPY. Why? Because these are the pairs that I have some trades on. No, let's start with the CAD/JPY trade. Now, CAD/JPY is a trade that this is a trade that I took on CAD/JPY last week, and just for transparency's sake, I closed off just around here on CAD/JPY. Why? Because I had one position running and it had already hit like the 200 pip mark. So I wanted to be a responsible trader and just lock in some profits and look for some new areas to buy from, because I'm still actually bullish on this setup. Why? Sorry, on this pair. Why? First of all, the actual bearish area of liquidity hasn't yet been reached, and or you can say our take profit hasn't got hit. If you're a new viewer, you could just go down in the playlist and play the last week's pre-market and live market analysis to see what I'm talking about. So anyway, so price on CAD/JPY is looking like this, as you can see. I saw that after this break of structure here, there was a new bullish area of liquidity that was created here. So this is the area of liquidity that led to the break of structure here. So this is an area that I am waiting for to take some more buy trades off of. And as you can see here at the top here, we started to do some kind of retracement. So we reversed here from bullish to bearish. We can see that price started to retrace again here, trying to tap into this bullish area of liquidity, okay, for sells. And we can see that price closed a little bit bearish on this pair, the 1 hour. Looking at the 1 hour time frame. Okay, so looking at the 1 hour time frame, in the event that this level gets respected, then this would become a targeted low. And just below it, we have our entry level. Now this entry level going down to the 15-minute time frame. The reason why I picked it was simply because it's an area where resistance turned to support, and it's an area whereby it hasn't yet got retested. So it's still it's an unmitigated level to me. So somebody could have their order block right there, like based off how everything is looking on the daily. They could have their order block zone marked up just like that. They could be waiting for buy trades off of there. So I'm one of those people. I'm waiting to see how price reacts to that level. So going now to USD/JPY, the setup is actually kind of the same. It's kind of the same. So let me start it off on the daily time frame. But really, the setup is really the same. It's almost the same anyway. As you can see on USD/JPY, the market has actually already opened, and we can see that price gapped down. Okay, so gapping down is, to me, it's an indicator that this market this week is going to be bullish. Okay, so that's something that I like to look out for. So I usually stay up and see how the market has opened. Like, so okay, on the daily we can see that the market is bullish, but then we could still see, we can still expect to see price just go bearish until it comes to our area of liquidity. Now, why do I have this as an area of liquidity? Right, one, you can see that in the daily time frame, price shifted bullish. Okay, and as it shifted bullish, what it did do, it created for us a new bullish area of liquidity. And actually, the funny thing about this bullish area of liquidity is that, first of all, price showed like as if it wanted to sell, but then again, after price tapped into some other bullish area of liquidity here, price then flipped again. It flipped the script on the sellers. So price first flipped the script right here on the sellers, and again it flipped the script again. So two times in a row. And after that, it created for us a new bullish area of liquidity just before it broke these levels here, and that is a level that I that I am basing my trades off of. So this is a level that I am looking at right now, and this is the level that I have marked up. I wouldn't put anything there that I wouldn't put anything out here that I wouldn't do. I'm showing you guys these trades, and these are the trades that I'm actually going to take coming into this new week. As you can see above here on the 1 hour time frame, I like going to the 1 hour time frame, as you know, because I get to see price interact with the levels, with the significant levels that I like to consider as more influential in relation to the higher time frame. So usually for me it's usually on these forex pairs, the 1 hour and the 30-minute are my go-to time frames to clearly draft my trading setups, you'd say, with the entries and all of that. So enough of the talk, let's get into the work, and let me show you. So the setup on USD JPY is actually similar to the one of CAD JPY. So CAD JPY, just like USD JPY, left for us a bullish area of liquidity just before it broke structure right there. See, bullish break structure, boom, broke structure there. Okay, so it left for us this bullish area of liquidity. As we can see here above here, price then started to reverse on us. So as this reversal pattern took place, it led to, first of all, price violated these bullish areas of liquidity. Meaning what? Meaning price is still going to come and take this low. This low here that was created is a weak low. Why is this considered a weak low, by the way? First of all, this low was not created in any significant bullish area of liquidity. It was rather created in between the body of this bullish candle. And usually for me, trades areas of liquidity that are created within the body of a week, a body of a candle, more so on the 1 hour time frame, for me, are weak levels and trades that are framed within, first of all, an area of liquidity could be bearish or bullish. In this case, it's bullish, and the trades that are formed just within the week's level, to me, hold stronger than other levels. So that's something that I like to look out for, and that's how I arrived to this trade right here. So I'm having this trade here, and I am having my first take profit is going to be this level here now. It's going to be this level, and my second take profit will obviously be that level, and ultimately this level that is resting above here. So with that in mind, so we've gone through gold, USD JPY, CAD JPY, and now the other pairs to look at just briefly could be Euro USD, Euro USD, we can see that it is also opened up. We can see a week to week break right here. Let's use a cleaner chart. Let's use Wanda. So Euro USD, I'd say that price would probably come to this level here, but I don't know if it's going to come to that level. But let's still analyze what the hell is going on right now, just so that we can just get this out of the way. Okay, cool. We can see that price here was trying to reverse to the upside, but then we can see that now price created for us a week to week break structure to the upside. So what do we know about week to week breaks of structure? Usually they show that the other side is still in control. So here this week to week was a bullish break of structure, but then given the fact that now price failed to break above here with a wick to body, it shows that the sellers are still in control. So that means that this level here is going to get taken out. Let's use the 30 minutes. This level here could get taken out, and possible areas for re-entry could be one, this level here, first one, of course, first area of liquidity. That's the first area of liquidity, and this one. This is the level that led to the break ultimately. So let's see how it looks like on the 1 hour time frame, and speed things up. I don't want to make this video too long. This is what it takes. This is how we look for trades and setups. Okay, things are looking really unclear to me. I'm not seeing what I like to see. Maybe probably this area here. It's in the 1 hour time frame, and it's on the 1 minute time frame, and taking trades just like that in the 1 minute. Something that I rarely do, but anyway, I'm saying this level here. And within this level, on the 1 hour time frame, I'm seeing that an area where support and resistance right here. That's something to look out for. So in the event that price reaches this level and does something like this, best believe that this level down here will get taken out. In the event that it gets violated, well, it's no big problem. It's no big problem. First of all, you would have been risking like 6 pips, and then you would probably, this zone here is not so good to me. I'm not saying so. I'm not seeing any like setups here. Like, I'm not seeing my confluences or setups that I could frame around this zone. So the only zone that I see right now would be this level, Euro USD. It's not financial advice, but we could just, well, I am going to test it out and see how it goes. In the event that that level there gets respected, then well, we'll go lower. Will price come back to this level here? Well, probably it will, but only after probably we have tapped into this bullish area of liquidity. That's the only time I see this level getting tapped in, given this current price action and also the fact that we are in a new month. Okay, cool. So let's go to Bitcoin. Let's do it very, very fast. Bitcoin from the daily time frame. We can see that Bitcoin is now retracing this bullish area of liquidity. We can see that Bitcoin has just broken above the 95,000 level, and it has left for us a bullish area of liquidity right here. Okay, so as it has created for us that bullish area liquidity, would like to go to the 1 hour time frame and see whether we can find anything that is useful that we could use. So okay, I'm seeing a lot of but I'm not seeing any setup for me according to my system. I'm not seeing anything, so I'll just leave Bitcoin alone for now. Okay, US 30. I'm going to start off for the daily time frame as well. As you can see, US 30 has just kept on going bullish. This was the initial area of liquidity that I wanted to get in at, but then I'm seeing that price is continuing to go higher and higher, and probably tapped into probably created other bullish areas of liquidity, and I can see that price already tapped into some of them right here, just right around. Okay, well, there's some levels here. Almost been tapped. There's another one here, but right now I haven't gone through this pair with a sound mind, so I think I'll do some more analysis on this pair off screen and see what I come up with. Okay, with that all, alright, that wraps up today's pre-market analysis here on FX Titan Lab. Watch those key levels closely and pay attention to how the market reacts at the weekly open, because this is where the real opportunities show up. If this gave you value, hit the like and subscribe button to turn on the notifications so you can stay ahead of the game. Want more insights in real time? Join the FX Titan Community Lab on Telegram. The link's in the description, and see you in the next one.